Michael Burry just came out on Twitter and said to sell. What does this mean for the stock market? What's going on? Because there's been a huge bear market rally already. For January, the S&P is already up 7+%. The Nasdaq is up 13+%. Michael Burry has predicting a lot of these crashes from recent times. He got famous from the 2008 financial crisis that came because of the credit default swaps. He predicted that market crash. He predicted in 2021 this huge bubble with a lot of these kind of SPAC companies and companies with no profits that were going to get killed in the market eventually in all this speculative bubble. Michael Burry has been right on a lot of things, but do you guys think he's right about this bear market rally, or do you think it's fake like he does? I'm going to go over 3 reasons why Michael Burry says sell everything, and he's been talking about this constantly. So let's go over his Twitter tweets and everything that he talks about, why to sell now. So Michael Burry said sell everything right before the Fed minutes. The Fed came out and approved a 1/4 point hike. So the Fed continues to try to kill inflation. It said inflation's around 4 to 5% and it's trying to get it at 2%. So the Fed is going to keep raising interest rates as long as the Fed keeps seeing inflation at this 4 to 5% because it wants it at 2%. So as the Fed keeps increasing rates, this will affect the stock market and it will affect the real estate market, because people are looking at different areas to get some interest, because the stock market and the real estate market isn't going to provide the same amount of returns that it did before when the interest rates were at 0. The Fed is raising interest rates at the fastest rate since 1980s. The last time the Fed had interest rates at 4.5% to 5% was during 2007, and we all know what happened during 2007. So a lot of people are predicting the same type of outcomes as before. So this is why Michael Burry has came out and said to sell. Michael Burry released this tweet about the Federal Reserve and what's going to happen in the market. Inflation peaked, but it's not the last peak of the cycle. We are likely to see CPI lower, possibly negative in second quarter of 2023 in the US in a recession by any definition. The Fed will cut and the government will stimulate and we will have another inflation spike. It is not hard. The second reason is because the silliness in the market is happening again. These bubble stocks are peaking, they're going higher. Remember when he said the silliness must go? 29 companies had a market cap over 10 billion with EBITDA of less than 100 million. All the silliness must go. Michael Burry tweeted this out. Look what's been happening in the market. Look at the stocks that have rallied in January so far. Lucid up 110%. W up 102%. Open Door up 90%. Affirm up 82%. Carvana up 75%. Tesla up 7% already. And this is just the beginning of January, which is crazy returns just for 1 month. This rally is coming too fast. We even have other companies moving way too fast. Spot up 43%, Shop up 42%, Nvidia 34%, AMC 31%, Square 30%, Snap 29%, Salesforce 27%. So you can see how this rally has just continued. It reminds you back in 2020 when all of these stocks were just running high no matter what was happening. We're seeing this in January. Retail investors are getting right back into the market. They're buying a lot of stocks right now. So that's why you see a lot of these stocks running up really high. So I guarantee you Michael Burry is seeing this as a bear market rally that is going to come down because of these interest rate hikes. A lot of these stocks do not deserve these 30-40% re-rates right now because there's not a lot of news that came out about these stocks that deserve these huge pops. Do you think the silliness in the market is back with all these meme stocks kind of going up high again? What's your take on this, and tell me what you think down below. Lastly, Michael Burry talked about a lot of white collar jobs doing job cuts, which is coming because a lot of corporate profits are going down. So how is this going to affect earnings, and how is this going to affect the future? If companies are not making as much money, they're going to have to do a lot of cost cutting, a lot of efficiency stuff. So hopefully they can see that come back into the company. But what if that doesn't happen? He even looks at CRM. He said CRM should be down more than 25%. And job cuts are not the only reason why not to own Salesforce. So you can kind of see what's happening because a lot of tech companies laying off a lot of people. We see Snapchat, we see Meta, we see Amazon. So you kind of see a lot of these companies going through these corporate cuts right now. And that might be the story of 2023. So I think that's what Michael Burry is seeing in the market. So we have the Federal Reserve raising interest rates, trying to kill down inflation. The second reason, because we see a lot of silliness in the market. We see like Lucid, we see like AMC kind of riding high right now. There's a speculative bubble happening again in 2023. Let's see what happens. And then we have all these job cuts happening. Corporate profits are probably going to get cut in half this year. as a lot of companies are preparing by doing a lot of job cuts. But what do you think about Michael Burry's tweet about sell right now? Guys, like this video and subscribe to my channel. Peace.